Have you ever wondered how your M1 Finance portfolio will fare in the upcoming year? There's one key factor you need to consider to ensure your investments stay on track for the long term, but more on that later. M1 Finance is an innovative platform that empowers new investors to take control of their financial future with ease and with flexibility. At its core, M1 Finance combines the best features of traditional brokerage accounts with the simplicity of robo-advisors, creating a user-friendly experience for investors of all levels. With M1 Finance, you have the freedom to create a personalized investment portfolio tailored to your unique goals and risk tolerance. You can choose from a wide range of stocks, bonds, and exchange-traded ETF funds to build your portfolio or opt for professionally curated portfolios known as PIs. One of the standout features of M1 Finance is its dynamic portfolio rebalancing. This means that as you deposit funds into your accounts or receive dividends, M1 Finance automatically reallocates your investments to maintain your desired asset allocation. This hands off approach to portfolio management helps you stay on track with your investment strategy without the need for consistent monitoring. Additionally, M1 Finance offers fractional shares, allowing you to invest in high priced stocks or ETFs with as little as $1. This feature makes it easy to diversify your portfolio and invest in companies or assets that may have been out of reach otherwise. M1 Finance also prioritizes transparency and affordability with no commissions or account fees for most investors. This means you can invest more of your money without worrying about hidden fees eating into your returns. Overall, M1 Finance is a powerful tool for new investors looking to dip their toes into the world of investing. Whether you're saving for retirement, building wealth, or simply looking to grow your money, M1 Finance provides the tools and resources you need to succeed on your financial journey. On this channel, we are focused on dividend growth and value ETFs. Dividend ETFs are a game changer for long term investors seeking to retire with a steady stream of passive income. By investing in a diversified portfolio of dividend paying stocks, you not only benefit from potential capital appreciation, but also receive regular cash payments in the form of dividends. As someone who did not grow up learning how to invest, I have built a path for my family using The Simple Path to Wealth and I Will Teach You to Be Rich books by both J.L. Collins and Ramit Sethi, respectfully. Today, I'm thrilled to take you on a journey through my M1 Finance portfolio where I've strategically curated a selection of dividend growth stocks and ETFs. Let me know in the comment section below what your favorite ETF holdings are in your portfolio. Let's kick things off with the first holding in my portfolio, DGRO. The iShares Core Dividend Growth ETF, DGRO, is a fantastic choice for dividend growth investors as it provides exposure to high quality U.S. companies with a track record of consistent dividend growth. With holdings like Microsoft, Apple, and Johnson & Johnson, DGRO offers stability and long-term growth potential. Moving on to another top holding, SCHD. The Schwab U.S. Dividend Equity ETF, SCHD, focuses on high-quality U.S. dividend-paying stocks with an emphasis on dividend sustainability and growth. Companies like PepsiCo, Coca-Cola, and Chevron make up the bulk of SCHD's holdings, providing stability and income potential for investors. Now, let's talk about American Express, AXP. I love using their banking credit card offerings, as well as their membership rewards program for travel. Amex is a global leader in the financial services industry, known for its strong brand and innovative payment solutions. As a shareholder, I'm attracted to AXP's consistent dividend growth and its ability to adapt to a changing consumer trend. At the beginning of this video, I said there was one key factor to consider while investing for the long term. That is to have exposure to defensive plays like a consumer staple or a utility. I dedicate a portion of my portfolio to VPU and VDC to protect my portfolio inside of M1 Finance if that recession does come this year. Vanguard Utilities ETF, ticker symbol VPU, is known for their defensive nature and reliable dividends, making VPU a staple in any dividend-focused portfolio. With holdings in companies like NextEra Energy and Duke Energy, VPU provides a steady stream of income while also offering diversification benefits. Next on this list of defense is VDC, Vanguard Consumer Staples ETF. Consumer staples are essential products that customers need regardless of economic conditions, making VDC a defensive play in uncertain times. With holdings in companies like Walmart, Target, and Costco, VDC provides stability and income potential for investors. Moving into the fixed income portion of my portfolio, we have TLT, the iShares 20 plus year Treasury Bond ETF. TLT invests in long term U.S. Treasury bonds, offering safety and stability during periods of market volatility. While the yield may be lower compared to equities, TLT provides diversification benefits and acts as a hedge against stock market downturns. Now let's talk about VFH, the Vanguard Financials ETF. VFH provides exposure to the financial sector with holdings in banks, insurance companies, and other financial institutions. As the economy grows, so do the earnings of financial companies, making VFH a solid choice for long-term investors seeking dividend growth and capital appreciation. Moving into the technology sector, we have VGT, the Vanguard Information Technology ETF. VGT offers exposure to the leading technology companies like Apple, Nvidia, and Microsoft, which are driving innovation and reshaping the global economy. With technology becoming increasingly intertwined with our daily lives, VGT provides growth potential and diversification for investors. Now let's talk about SPYG, the Spider Portfolio S&P 500 Growth ETF. SPYG invests in companies within the S&P 500 index that exhibit strong growth characteristics. With holdings in companies like Amazon, Facebook, and Alphabet Google, SPYG offers exposure to some of the fastest growing companies in the world. Next on the list is VTI, the Vanguard Total Stock Market ETF. VTI provides broad exposure to the entire U.S. equity market, including large, mid, and small cap stocks. With over 3,000 holdings, VTI offers diversification benefits and acts as a core holding in my portfolio. VTI is the ETF that is written about in the book A Simple Path to Wealth by J.L. Collins. Moving into the industrial sector, we have VIS, the Vanguard Industrials ETF. VIS invests in companies that manufacture and distribute goods and services ranging from aerospace to defense and machinery and transportation. With holdings in companies like Boeing, Honeywell, and Union Pacific, VIS offers exposure to sectors essential to the functioning of the economy. Now let's talk about VAW, the Vanguard Materials ETF. VAW invests in companies involved in the production of raw materials, chemicals, and construction materials. With holdings in companies like DuPont, Dow, and Sherwin-Williams, VAW provides exposure to sectors that are integral to economic growth and infrastructure development. Next on the list is Costco. Costco Wholesale Corporation, COST, is a leading retailer known for its membership-based warehouse clubs and low prices. As a shareholder, I'm attracted to Costco's consistent growth, their hot dogs, their loyal customer base, and commitment to delivering value to shareholders. Finally, let's talk about TXN, TI Texas Instruments. TXN is a global leader in semiconductor design and manufacturing. With a diverse portfolio in analog and embedded processing products, as technology continues to advance, TXN is well positioned to benefit from increased demand for its products and services. Each holding plays a unique role in my overall investment strategy, providing diversification, income, and growth potential. Remember, investing is a marathon, not a sprint. So stay disciplined, stay focused on your long-term goals, and let your investments work for you. If you are new to investing, you have come to the right place. Click on the M1 Finance link in the description below to get started with your M1 Finance investing journey. Subscribe if you found value in this content, and remember, it's your money and no one will care for it better than you will.